So the next question I have is, what are the most important things that a person should be thinking about if they're self-employed and looking for a mortgage during COVID-19? And then the same thing, most important things if they're salaried and they're looking for a mortgage during COVID-19. Mhm.
So let's start first with the salaried employees.
Sure.
Salaried, they're always a lot easier to get qualified because their income is fixed. It can be tracked, their hours are permanent, so it's easier to get a salaried person qualified. I believe as long as you're still employed full-time during COVID-19, you should be fine to qualify for a mortgage.
Mm.
Um, I wouldn't be surprised if bank starts looking at the industry you're in. An example would be if you work for the aviation industry or the tourism industry. I wouldn't be surprised if they'll start looking closer at your application and looking for more strengths elsewhere. Like if there's a co-borrower that's not in the same industry as you, to make sure that if one person loses their job, then the mortgage can still be paid.
Mm.
If you are self-employed, that's a tricky one right now because a lot of self-employed people are not earning or may not have earned as much over the last few months. And a lot of banks look at your bank statements, your deposits to qualify you as a self-employed person. So I would say that as a mortgage broker, we would probably be going back rather than 3 months or 6 months, maybe asking for a year of your bank statement.
Mm.
Show that you have had a trend of good earnings, and the fact that over the last 3 months you're not showing as much income is due to COVID. However, if you are a self-employed person that declares very strong line 150 net income, you are looked at pretty much the same as a salaried person because we're using your net income of line 150 to qualify you. That way you can get the best rates on the market and it's easy to qualify. My
What do you
previous
consider?
comments would apply more to people that don't show a good line 150. So an example would be your gross is 250, but your net is 30,000.
Mm.
That's
Mm.
going to be a problem to qualify. In a case like that, the bank will be using your bank statements.
Mm.
And just know also that you may not end up with the best interest rate if you're going to a lender that's qualifying you mainly on your bank statements.
Mm.
Those lenders are considered B lenders. They charge a 1% fee and they charge a higher rate. They'll do the mortgage because their threshold in terms of ratios are higher. So you will get the mortgage done, but it may cost you more.
Okay. And what would be a strong, if somebody were considering, what should I put on my line 150? Well, net is net, right? Or how many expenses should I write off so that I make sure that I'm in a stronger position? What would you consider a strong line 150 or net income?
Well, think of it this way. To buy a house for $500,000 right now, you need an income of about 105,000.
Hmm. Okay.
So if you're
That
self
changed. Yeah. Hmm.
so if you're self-employed, depending on the price house you want to buy and your down payment, I would say consult a mortgage broker to tell you what the numbers should be in terms of how much income is required to qualify for the price house that you're considering. And then you and your accountant can work the numbers accordingly. And when I say work the numbers, this doesn't mean you're doing anything funny or nefarious. You're just maybe choosing to write off less expenses this year so that your net income could be higher so you can qualify for the mortgage.
Okay, awesome. Great advice. There's a lot of pre-planning to do out there, everyone, and a mortgage broker is the best place to start.